Chris, thanks so much for your time. A very strong set of results, as you and your management team did allude to. But of course, it wasn't the platinum market that was the saving grace for Anglo this time around. It was your other metals. Talk to us about what the drivers of that demand was.
So thanks very much. I think that's exactly right. This set of results came from great operating performance, great cost control, but also improved prices. And you mentioned that platinum itself was down 3% year on year, but it was the palladium, rhodium, iridium, and ruthenium prices, all of them together made for a rand basket price was actually up 18% year on year. And so it really was a combination of all of those other metals, largely driven by the very strong demand in the gasoline auto market, but also strong industrial demands, which is what's driving some of the minor metals.
But the platinum price, obviously, or platinum rather, does remain a big part of the group still. And it looks like the industry is actually positioning for an uptick in that price, despite the fact that things are not looking so great right now. Can you walk us through what is informing this view of a better outlook for the platinum price?
So I think to be very, very clear, we don't do that. So we just manage the business for whatever the price is now, not sort of hope and pray for a better price. And I think that's been what's really made us focus over the last 5 years, to be able to shut down mines that are not making money, put mines on care and maintenance, cut production at existing mines that doesn't make money. And I think that's been a far better strategy than hoping for a better price. So I certainly can't speak for our competitors as to what they are hoping for and whether they anticipate a better price. I think what we see is that the basket price, we believe, continues to actually have good underlying fundamentals. We do think that actually platinum will be under some pressure. It's slightly oversupplied at the moment. It has gotten some negative fundamentals. So personally, I'm not betting on the price of platinum improving, but we are expecting the price of palladium and rhodium to remain strong, in particular because of the strong demand for gasoline vehicles and also because of the very strong industrial demands for PGMs.
But Chris, some might say that that $200 million investment that you have made in conjunction with the PIC is a sign of a man who is quite hopeful of what platinum may do in the future.
I think it's more a sign of what we believe can be done to platinum. So the fact is that we're investing in market demand, both in jewelry, investment and industrial, actually means that we need money to be put into the platinum market so that we can grow that demand, so that demand will come back to the industry. So I think it's much more a case of that we believe we can drive the creation of demand rather than we think that we quickly will get a return on platinum by investing in it.
And the group saw a strong demand for its metals from Asia, from Europe as well. But of course, these are regions that are quite impacted by the trade war talk between China and the US. My question to you is, how worried are you about what is happening between the world's two biggest economies in terms of a trade spat?
So you've certainly seen in the last month or so, we've seen actually all prices for commodities have fallen on this expectation that this is going to impact trade between these two big commodities. But what we don't think that actually, if you look at the underlying fundamentals, we don't think it's actually going to impact the trade in the uses of commodities or products that use PGMs. So we think that this price is completely overdone and we think it'll rebound. But it clearly is not, it's not healthy and not useful to the world that we've got these two big superpowers that are fighting with each other. You know, we've got a great saying here in Africa that when two elephants fight, it's the grass that gets trampled. And that certainly feels like what's happening in the world at the moment. But actually, underlying fundamentals and the impact on that, we think there'll be very little underlying impact, and we think that therefore prices will recover to reflect the underlying fundamentals of the PGMs.
And Chris, let's talk about that big acquisition you made. Now the Mototolo operations, you're injecting around R1 billion into the South African economy over a period of 6 years or so. Is this a sign of confidence in South Africa's economy?
So it certainly is a sign of confidence. You know, we've been selling some of our assets with the top end of the cost curve over the last number of years. But I think this is again showing that we are here, in South Africa, we believe that we can grow certain assets, but we want to own and operate the best PGM assets. And we do already own and operate many of the best assets. But this one, we want to own a greater stake in Mototolo. And that's why we owned already 50%. And that's why we're buying out the Glencore percentage. We think that by putting that together with our De Brochen resource, we'll substantially improve the life of mine, which was going to end in about 4 to 5 years. Now, by putting it together with our De Brochen resource, we've got more than a 30-year life of mine. It's got potential to scale and to grow. So we do believe that it's an investment in a great asset, but it's also an investment into the economy of South Africa. And it'll be about 1.5 billion, the value over the next couple of years, 800 up front, and an NPV cost of about 800 over the next 5 to 6 years.
Not small numbers you're mentioning it there, and of course in the statement you did mention that it's tied to spot prices and that it's capped at 22 billion rand. There were some of your shareholders who were concerned about that cap. How probable is it that you might reach that, and what does this mean for your balance sheet?
I think it's a very good question you ask, because it is important that we just alleviate some concern. There is no potential of it getting to 22 billion. What you have to do, that's just a regulatory requirement from the Johannesburg Stock Exchange, because if there's no cap, then they see it as uncapped, and if it's uncapped, it becomes a Category 1 transaction, which this is not, and that means you must go to shareholders to get approval, etc. So you need a cap, and that's just short of 30% of your market cap. That's why there's this cap. But to give you a sense, the rand would have to be at 57 to the dollar for us to be able to get to that price. Of course, if that was what we were doing, or we would have to see platinum, palladium, and rhodium prices somewhere between $3,000 and $9,000 per ounce to be able to get to that kind of number. So that's not going to happen anytime soon. But imagine if that did, what that would do to the value of the rest of the company. So I don't think anyone should worry about that cap. It's just a regulatory thing that says you've got to have some cap at just short of 30% of your market cap. I think a much better way is where you started, and that's to say that this is going to cost us around about 1.5 billion rand, of which 800 million will be upfront, and the rest will be over a period of 6 years that we'll pay on an annual basis.
Last one. Neil Froneman sees the platinum price going up to $1,200 over the medium term. Do you agree? How about you?
So I think if you look at the cost curve, though, it's unsustainable that half of the cost curve is loss-making. At some point in time, the price must reflect where sort of 90% of the cost curve is making money. If not, that production will come out the market. If that production comes out of the market, there'll be less production and the price will go up. So I think it's not only Neil, but I think most market commentators see platinum prices higher in the sort of medium term, in the region of $1,200, $1,300. I don't think that's out of line.